for investors looking to participate in Nigeria's debt capital markets in 2024. What are some of the key factors to consider? We have Dipo Ajayi, the head of fixed income and FX at Chapel Hill Denham Securities. He joins me now for this conversation. Thank you so much, Dipo. Looking at the capital market for Nigeria and the playbook for investors, how should investors navigate the Nigerian space in 2024?
Well, I think most decisions spurs from what is the government doing, basically across board, even in any sector. You have to be very acquainted with what the government is doing per time. And when you look at this year, 2024, it simply means that the government will be very much in the market trying to actually raise capital. And so what that means is that yield should be very attractive for investors in the market, and basically I also think that we'll likely see more of influx of foreign investors into the market this year, and the view is premised on the fact that we expect Naira to at least stabilize at some time during the year, because when you look at sanity is returning to Nigeria data one way or the other. We're already producing like about 1.5 million barrel, which is just exactly what we quota for the year by OPEC. And also, when you look at the fact that also we've gotten first tranche of Afrexim inflow, and we expect to get the balance anytime soon. So it simply means that one way or the other, we'll start seeing liquidity in the FX market, and this is what most of these foreign investors are looking at. They don't want to be the one to actually come in first. They want to see stability in that market before actually bringing in their funds. And also, the good news coming from Dangote refinery is also another thing to reckon with. It simply means that we may not need to actually import refined products with the exported proceeds. And it means that we have more FX to actually play with, and that sounds good for the economy for the year 2024. So it simply means that government will raise capital more in the local market, and it creates an opportunity for anyone that actually wants to play in that market to get high yield.
Because let's get to that, because in fact you took it right off my mouth, because I'm looking at the DMO's debt strategy for 2024. They've not articulated it as much, but in terms of the posturing and what you can see from that, it's looking more like you said, they are going to come to the market in there. But when you look at, for general investors who are looking at either the debt capital market or even equities, in terms of returns, vis-a-vis what happened last year, how would you advise investors?
Of course, if you have to take clue for what happened last year, equity market actually gave a better return. Yeah. And I think the only market that can say, okay, maybe actually perform better than equity market will be the Eurobond space. And I think the advantage was from the devaluation of Naira. So it simply means that aside from return on the investment, you also get return from...
But you don't see repeat performance.
So I don't expect to see that this year, you understand? I don't expect to see more devaluation of Naira. So I expect equity market to actually perform very well this year compared to what you would have expected in the fixed income market. But maybe not as much as what we saw last year, because equity market did very close to about 50% last year, and it's not something you can easily just get in the fixed income market.
But when you look at the primary market auctions and the activity in the first quarter of 2024, for you, what trends do you see that could play out here?
In the parallel market?
No, I'm talking about the primary market.
For me, I think taking a clue from the precedents, DMOs, they are always very aggressive in the first quarter of the year. And we all understand, because you are just kickstarting the year, a lot of obligations on the table. You need to fund some of the projects. You need to kickstart some of those projects. So you need to take a lot of funds at the beginning of the year. At that time, revenue is not coming in aggressive as expected. So you need to be aggressive in that first quarter. So we expect DMO to be a bit aggressive in this first quarter. But the norms that we've seen in the past is that DMO most time will show you certain volume, but will come to the market and sell more than what they are showing. And I think that we'll see more of repeat of that strategy this year. I won't be surprised that DMO will just be showing like about 360 billion for each month, but they can go ahead and sell as much as 700 billion to the market. So that's likely what we're likely to see this year as well.
Yeah, because a lot is hinging on the performance of the Naira this year, and then looking at the challenges we faced last year, were not really doing good in terms of when you look at compare our peers in Africa and even in the world in terms of how our currency performed last year. But what's your take on how the currency is going to perform?
Yeah, I mentioned some of the things that I feel that will give Naira more stability this year. We are not expecting, in no time we expect that Dangote refinery to start producing. That should help, will give more muscle to central bank to be able to meet most of the obligations that is actually sitting on the table. As stability is returning back to Niger data, we feel that if we can maintain the 1.5 million barrel per day, because if you look at in the last, we've been doing like an average of 1.2 million barrel per day. It means that one way or the other, we are getting another 300,000 barrel income on a daily basis, and that will further improve that revenue that accrues to the reserve and help the central bank to also actually be able to actually meet FX obligations as when due. Another thing that comes to mind is also we've been expecting central bank to come up with the FX framework. We've been hearing a lot about that,
yes,
and I think that will also because we heard that in 2017 and we saw what happened. In 2017, central bank mentioned about FX framework. They came out with the first thing they did was to actually reintroduce the BDC guys back to the market. Later on, they created the INU window, and also to capital, they actually opened like a forward market or futures market where you can actually hedge your obligations. And we saw what happened. Naira actually appreciated from north of 500 to about 360, and we traded at 360 for close to 3 years before COVID. So I think that framework is also a key thing that will also go a long way in determining how we actually market actually operate for year 2024.
Definitely interesting times in the Nigerian capital market.
Yeah.
Thank you so much for helping us put that in perspective. Dipo Ajayi, the head of fixed income and FX at Chapel Hill Denham Securities.